All right, let's dive right in. Today, we are cutting through all the noise, all the complex indicators, the so-called magic trading systems, and we're getting back to basics. We're talking about the most fundamental source of truth in any market, the price itself. And let's kick things off with a story that, well, it's probably going to sound pretty familiar to a lot of you. So this comes from Al Brooks, who's now a super successful professional trader. But here's the thing, he didn't start out that way. His journey began just like so many others. He was looking for that secret system, that holy grail that would just print money. He shelled out thousands on these automated systems with these unbelievable promises, only to find out it was all just a fantasy. Sound familiar? Yeah, it's a story a lot of traders know. So after getting totally burned, Al Brooks did something kind of radical. He stripped everything away. He just looked at a blank price chart. And that really gets to the core question we're asking today. What if the key to all this isn't some complicated algorithm, but simply learning to read the story that the market is telling you, one bar at a time? Okay, so first, let's talk about the problem. I like to call it the trading labyrinth. It's that feeling of being completely and utterly lost in a maze of information, constantly chasing these promises of quick riches that just never seem to happen. This is really the heart of that labyrinth. The sheer amount of information out there is just paralyzing. You've got these blinking indicators, lines crisscrossing everywhere, gurus on social media all shouting different advice, and that feeling of being overwhelmed, it usually comes from not having a solid foundational strategy, not really understanding the basic rules of the game. So, how do we escape this maze? Well, it's by getting behind a really simple but incredibly powerful philosophy. The price is king. This is the whole idea behind what's called price action trading. And it's not some rigid set of rules, it's more of a framework for understanding the market's behavior directly from the source. Price action is all about one thing, analyzing the raw movement of price on a clean, simple chart. It's built on the belief that everything, all the news, all the economic data, all the fear and greed of traders, it all gets baked into one thing, the price. As the trader Rainer Teo puts it, price is king, everything else is secondary. I love that. This slide really breaks down the two different ways of thinking about this. On the left, you've got all these indicators. But here's the catch. Most of them are just derivatives of price. They're telling you what has already happened. They lag. Price action trading, on the right, is about reading the price in real time. It's about decluttering your chart so you can actually see the raw story of that battle between buyers and sellers. Okay, so if we're going to read the story that the price is telling us, we have to learn the language first, right? And just like any language, you have to start with the basics, the grammar. In the world of trading, the grammar of the market is its structure. Now, this idea goes way back. It's based on Dow theory, and it says markets generally move in four phases. First, there's accumulation. That's when the smart money is quietly buying after a big drop. Then comes the advancing phase. This is the clear uptrend when the public gets excited and jumps in. Next is distribution, where the smart money starts selling at the top. And finally, the declining phase, a clear downtrend usually driven by fear. Your first job always is to just figure out which of these stages we're in right now. Now, within that bigger market structure, you have these key landmarks. We call them support and resistance. And it's really important to think of these not as perfect, exact lines, but as zones or areas of value. Support is basically a price floor where buyers tend to show up, and resistance is a ceiling where sellers tend to take control. So, if market structure is the grammar, then candlestick patterns are the individual words. They make up the phrases that tell us what's happening right now in that battle between buyers and sellers. Let's focus on two really powerful reversal patterns. First step, we have the pin bar. Just look at that long tail or wick. This pattern tells a very, very clear story. It says one side tried to push the price really aggressively, but the other side fought back even harder and rejected that move, slamming the door shut. It's a powerful visual signal of rejection. And this brings us to probably the single most important rule when it comes to using these patterns. A pin bar that just shows up randomly in the middle of a chart, it's basically meaningless. It's just noise. But a bullish pin bar that rejects a key support level during an uptrend, now that is a high probability setup. Context is absolutely everything. Next is the engulfing bar. This tells a story of a total takeover. You see, the previous candle shows one side was in control, but then the very next candle completely reverses that move and then some, its body literally swallowing the previous one whole. It signals a sudden, decisive shift in momentum. And yeah, we're bringing this rule back because it is just that important. The exact same logic applies here. If you see a big bearish engulfing pattern form right at a major resistance level, that's a signal you should probably pay attention to. But if you see one in the middle of a choppy sideways market, it's likely just noise. You always have to ask, where is this pattern forming? So we have our grammar, that's the market structure, and we have our words, those are the candlestick patterns. Now it's time to put all the pieces together into a repeatable framework that you can use to identify these high-quality trading opportunities. Trader Rainer Teo has a simple but incredibly effective checklist for this. It's called the MAEE formula. It's just a series of 4 questions you should ask yourself before any trade. M, what's the market structure? A, is the price at an area of value? E, is there a valid entry trigger? And the final and most critical E, where are my exits? You know, you can find the absolute perfect entry signal in the perfect context. But if you don't have a plan for when you're wrong, you're not going to make it in the long run. You have to remember this. Managing your risk isn't just part of the game. It is the game. See, professional traders think in terms of survival first. A very common rule of thumb is to never risk more than 1% of your total trading capital on any one trade. This ensures that a string of losses, which is going to happen to every single trader, won't wipe you out. It keeps you in the game long enough for your winning edge to play out. And Rainer Teo's warning here is stark, but it's absolutely true. A winning strategy might give you an edge, but it's your risk management that keeps you in the game long enough to actually use it. This right here, this is the dividing line between amateur gambling and professional trading. So let's recap our little journey out of that trading labyrinth. First, we've learned to ditch the magic systems and just focus on reading the chart. We know that price action is a framework for understanding what the market is doing. We start by identifying the market structure first. That's our grammar. Then we look for our words, our candlestick patterns as entry triggers. We never, ever trade a pattern without context. And finally, a trading plan is completely useless without strict risk management. Ultimately, trading isn't about predicting the future with some kind of crystal ball. It's about reading the present, understanding probabilities, and above all, managing your risk. The market tells a new story every single day through the simple language of price. So the only question left is, are you ready to learn how to read it?